Hello, my name is Chad Hart. I'm an extension economist with Iowa State University. And today I'd like to share with you a brief discussion of the agricultural market outlook. As we sit here in mid-February, the idea is that we've been sort of treading water, if you will, within our crop markets over the past few months. But things are about to change as we start to enter towards planting season, and we're going to see USDA start to provide more frequent updates on what we expect in 2023. Now, the numbers I have before you right now are where we are currently at in terms of those estimates, and USDA is we're right in the middle, if you will, of tracking what's happening with the 2022 crop. So we're right in the middle of that 2022 marketing year. But with the Ag Outlook Forum that USDA hosts, they'll be providing us new numbers, if you will, for the projections for 2023. So what I've got for you out there right now is based upon their early projections that they released a couple of months ago as they thought forward with what we might see with this upcoming crop. And I'm going to tell you the big numbers I'm going to be watching to see if USDA adjusts them as they move forward here are basically as we look at the supply side, I'll be watching the acreage number up here. So I'll be trying to sort of draw on the board here and show you that 92 million acres up there for 1993 or 2023 is probably the number I'll watch most closely there because when you think about it, at this stage of the game, it's trying to figure out just how acreage will shift across the country. And what USDA has indicated, at least early on, is that we do expect more corn area to be planted than we had this past year, looking to rebound towards what we had in 2021. Now, if we think back to 2021, it was a big crop year where we had big demand as well. And I think that's the other challenge that I'll be watching to see how USDA adjusts as we look forward is what's going to happen then on the demand side of the market. So the other numbers I'll be watching will be down here in this gray box. And what do we see about demand for corn moving forward? Now, if you compare what we've got right now from 2021, 2022, and the projections for 2023, is that they're showing this sort of V-shaped where we did see a downgrading of demand for the 2022 crop, and they're looking for a bounce back, if you will. In this case, quite strongly across the board for feed, ethanol, and food seed and other continuing to grow. The big wild card to me will be that export number at the bottom because when you're thinking about demands that move, if you will, the most volatilely, it's our international demand. And that's the one where they're not quite showing as strong a bounce back. And I am concerned because that has been the area that they've been weakening the most as we've moved through the 2022 crop. So it does lead to some challenges as we look out there. Same thing as we look at soybeans. In fact, as you look at the soybean table here, I'm going to sort of key on them same features. When you're looking here, it's going to be again what we're going to see in terms of acreage. Right now, early on, USDA projected maybe slightly lower soybean area. Here's one where I am fully expecting USDA to maybe bump this number up somewhat because I believe that the strong prices that we're seeing for soybeans right now, in combination with some weakness in other crops, could lead to more soybean plantings, especially as we look towards the southern part of the U.S., especially along the Mississippi Delta region. But again, it's going to be this question of, okay, if we do see supplies increase over the next few months to next year, will we have the demand built up to sort of match that? And again, the number I'll watch there will be this export number down here. How do we see USDA adjust that as we move forward? Just like with corn, they show a bounce back there, but again, not quite as strong as we had with the 2021 crop. So I think that's sort of the key as I look at USDA's latest outlook is what do we see in terms of adjustments on the demand side to match what we might create in terms of supplies. Now, when you think about what's been hampering supplies over the past couple of years, it has been the drought. And we do see the drought monitor starting to improve, especially as we look across the western U.S., where we continue to see the strongest drought impulses there are still in the central and southern plains. But there is a thought that we will see things get better in terms of the drought conditions out there because we are seeing a shift in the La Nina El Nino pattern down along the waters of the Pacific as we look down towards South America. Right now, we are in La Nina, but National Weather Service forecast basically says that we'll move to more neutral conditions as we move to the planting season here in 2023, and might end up in El Nino conditions as we look towards the harvest end of 2023. And typically, as we move towards neutral or El Nino, what that does tend to mean is more rain, especially here in the upper Midwest. And that idea of that rain makes grain leads to the probability of bigger corn and soybean crops as we move forward in 2023. And those same aspects will impact global production as well. In fact, when you think about what happened to corn production worldwide this past year, we did see a tremendous step back in terms of corn production, with a lot of that being the smaller crop we saw here in the US, but we also did see a pullback in other parts of the world. In fact, right now, the concentration's on South America, and we have seen that the drought conditions down in Argentina have been pulling some of their corn production down as well. In fact, USDA adjusted Argentine corn production down about 200 million bushels within this latest monthly update. But we are seeing still a lot of competition out there when it comes to the export space globally on the corn side, with Brazil continuing to produce more and more corn. Now, when it comes to soybeans, while we do have drought conditions here in the US and down in South America, especially Argentina, that hasn't been enough to slow down the growth in global production. In fact, as you look here, the idea is while the US had a smaller soybean crop, the rest of the world actually had a much larger one, with especially Brazil continuing to ramp up soybean production. Argentina, again, that drought has an impact there, and it pulled that production down about 160 million bushels within this last month. But the idea is overall global supplies are very strong on the soybean side. So we have seen some challenges when it comes to dealing with the export markets. As we look at our export sales thus far, I would say on the soybean side, they've been good, but the concern is that we will see that weakness creep in as we move through the next several months here in 2023. As you look here, the idea is the black line is our average export sales pace. The blue line is what we saw in 2020, which was our best year in terms of sales of bushels to the rest of the world. So we hit a record in terms of soybean bushels then. The green line is what we exported in 2021. And while it wasn't a record in terms of bushels, it was a record in terms of dollars, because while the bushels fell, the price that we captured for those bushels increased enough that we set a record in terms of dollars. And then the red line's where we're at right now with 2022. And as you can see, we're basically about where we were at this time last year, which again was a really strong export marketing year for us. But the challenge is going to be, as USDA looks forward right now, they expect the red line to fall below the green line, so to fall below the pace for 2021, but to also fall below the pace of average. We're going to fall below the black line and end up just below it by the time we close out the marketing year. So we are expected to see more export weakness as we move through the first half of 2023. And we've already seen that export weakness when we look at the corn market. In fact, we found export sales to be very challenging in the corn market so far this year, where we're down significantly, not only compared to last year, but even compared to the 5-year average. And as USDA is looking forward, they do see us, if you will, getting back on a more normal sales pace, but that means we keep this gap where we stay behind average throughout the rest of the marketing year. So it's this export demand that, like I say, is presenting my biggest concern as we look forward for the 2023 crop. Can we see a bounce back in that international demand, especially if we do see a bigger crop being produced this year within the US? Now, when it comes to feed demand, we have seen, if you will, the pull down on the beef market as we have adjusted cattle herds to deal with the drought. So we do have fewer head of cattle out there as we're looking at meat production here for 2023. So that means less feed demand as we're looking forward there. And so that's, again, another place that I'm sort of watching to see, does USDA step back a bit on that bounce back for meat demand or for feed demand, especially given the fewer cattle we have right now within the U.S. Now we're looking for more normal production out of the birds and out of the pork industry, but I think the challenge is with the cattle market right now in terms of the amount of feed that's going to be needed to raise our livestock this year. Now, looking at the biofuel side, we've seen basically the ethanol industry ramp back up to pre-COVID levels, but we've also seen more volatility in their usage of corn, larger swings in the amount of corn being ground for ethanol. And I do expect that to continue, and USDA's early outlook for 2023 said that will be the case, that we'll likely use about as much corn as we did back in 17, 18, 2019, but that we will see these larger swings in production as we move over time. So overall, what it sets up is that we've got this situation where the market and USDA are expecting a bigger crop next year, but they're also expecting bigger demand. But I think in this case, I think the challenge is, can the demand keep up with the way supplies can move? And as we look at the current futures market structure, it says that we do see the potential downgrading of prices as we move forward to the 2023 crop, but that we're still maintaining a very strong pricing structure out there. In fact, as I look at futures here, as of the 17th of February, we do have prices remaining basically over $6 a bushel until we get to harvest here within the 2023 crop year. And then we see those prices work their way down below $6, but they're hovering just below $6. And I think this is a case of the market is waiting to see, one, how big an acreage bump do we get as we move through spring planting? Two, do we see that continued improvement in moisture conditions across the especially the central U.S.? And then three, they'll be watching, like I say, those international sales, and do we see the potential for that bounce back that will help work through these possibly larger supplies? And so we're factoring all that in, and I think we're creating a little bit of a price premium out there based on the risk that we see within 2023. But that also sets up where we may see larger swings within our crop pricing over 2023, possibly even larger than what we saw in 2022. And a lot of that swing is going to happen in the latter half of 2023. So we look at the soybean futures table right now. It looks very similar to what we see in corn. Strong prices right now for old crop, dialing down as we move through harvest time, but again, maintaining if beans in the teens as we look out 2023 and 2024 with those same sort of features, with the drought and the concern about acreage helping create a little bit of a bump out there for new crop, but figuring that there's going to be probably a downgrading in pricing because of concerns about export potential as we look out there. And so the way I've described it to farmers over the past couple of months has been that I like the first half of 2023. I'm not crazy about the second half. I think I am concerned about larger swings in prices, especially on the downward side as we look out there, if we do get these larger acreage and the potential for larger supplies, because I think our demand structure, not only domestically here through feed demand, but on the international side, the export demand is vulnerable right now. And so it may not be able to respond as quickly as our supplies can grow. So with that, as a quick summary of what we're seeing in the marketplace right now, like I say, USDA will be providing an update on their outlook for 2023 at their Ag Outlook Forum. So watch for those numbers, and definitely we will see how that outlook impacts the markets here, especially within the latter few days of February. Again, my name is Chad Hart. I'm an extension economist with Iowa State University, and we try to put these out about once a month to sort of summarize what's happening within the markets and what's to watch for as we look forward over the next month. And as we get into the planting season, what I hope you find is that the weather dries out just enough to allow us to plant in a good and timely manner, and we have a happy, healthy, and profitable 2023. Thank you very much for your time.